every day in the Forex market, using some strategic smart money concept principles. And today we'll be talking about how you can actually scalp through the London session, right? How you can make some money from trading the London session every day. I always base my trading strategy on some kind of routine pattern, something I can actually repeat every day. Repetitive processes are what actually fetches you money in the market. A process you can actually repeat every time you come to the market. You are looking out just for some specific things that you can easily see in the market, and you can take advantage of them because they are always familiar. You know how their formation comes to be. So routine, it will have you look for specific patterns, specific movements at specific time intervals, right? So you can actually achieve that trading the London session, or look for random things in the chart. So for those reasons, not we many traders often look for random things in the charts when they come to the market every day. They just pull up the charts and want to find certain things that maybe they have not even seen before, certain idea that they have not mastered over time. But if you can always do it in such a way that you come to the market, you look for certain key factors that you are sure will play out at specific time intervals of the day, then you are sure to always gets money from the market on daily basis. And when we talk about the London session is just one of the major sessions that the market trades every day. There are majorly four sessions that we could trade in the market. You can either trade the Asian session, the London session, the Sydney or the New York session, right? Or you can make it just three, with the Asian, the London, and the New York, right? Leaving Sydney out of it. Those are the three major sessions that you have. Market really doing a whole lot in the market. So if we talk about the London session starts at a particular time of the day, right? It starts at a particular time of the day. For us that are here in this part of the world, I'm in Nigeria, and London uses, I think, a GMT plus one, so it's most likely the same time zone for me, right? So in London session, the trade activities should start around 8 a.m. by our time, right? So 8 a.m. GMT plus one. So you have it that's where the traders in London, they wake up to get into their financial day, right? Economic activity starts around 8 a.m. in London. So starts from 8 a.m. and runs down till around 5, right? So we want to take advantage of all these particular movements that the market is going to be showing us during the London session. But are there some certain other key factors that we need to know about the London session? Yes, so the London session is a session that's characterized with very, very, very high volatility, right? The market has a whole lot of movements during the London session, right? And the time, just as I said, for GMT plus one, the time starts from 8 a.m. and moves down to around 11 a.m., right? That's around the London opening. Then the London economic activities, right, is going to be ending around 5 p.m. for GMT plus one, right? Then there are certain pairs you want to focus on when you trade the London session. You want to focus on maybe GBP USD, GBP, that's Great Britain pounds, then the Euro USD, right? Then there are certain strategies you want to look out for when you trade the London session. You're going to be looking out for the liquidity grabs, the order blocks, and the break of structures, right? You want to see price break structures, you want to see price grab liquidities, you want to see some other blocks being taken out and some other blocks being respected. That will form the basis of trading here uh, in the London session. So before you trade the London session, there are certain things you want to do. You want to prepare for the price movements during the London session. So what are the things you look out for, in preparation for London session trading? You want to mark out what key zones. You mark out your key zones, key liquidity zones. So Asian highs, Asian lows. That will bring us to talk a little about the Asian liquidity zones, or Asian zones here, Asian session. Okay, so you mark out the Asian highs, the Asian lows, you mark out the pure highs around, those sessions. Maybe the pure high could be the Asian low. If it's an uptrend, if you're expecting the buy, maybe you're expecting your pure around the Asian low, maybe you're expecting a sweep around the Asian low, or maybe the Asian high, whichever one suits your purpose. Then you want to analyze the market structure. In most cases, after market takes out Asian low, it wants to go out for another order block that was formed in the previous day, maybe the previous New York session, right? You can see price seeking out for the whole Asian liquidity, tapping into some, maybe the New York low, sweeping also the New York low of the previous day, and before you know it, price is skyrocketing again. Then you want to check out for manipulations at London opens. That's going to give you a whole lot of insights as to where price is going to be moving to, right? If you can spot out the manipulations, then you know that after the manipulation is completed, price is most likely to travel in the opposite direction. So those are the things you do when you prepare for the London session. Then you want to have your smart money checklist. And this is an example of a smart money checklist. You want to check out for your liquidity being swept. You want to check out for your valid order block in your either 15 minutes or 5 minutes with an imbalance. Remember, I have given videos on how to validate an order block. For an order block to be validated, one of the criteria that must be satisfied is this: it must have an imbalance there. Okay, so you want to see a break of structure. There's no other block without a break of structure anyway. So then your entry can be based on single candle mitigations and maybe some other critical stuffs there that you have. So your entry management. One of the things you want to know is this: when you trade sessions like London session, New York session, then you're most likely to be a scalper or a day trader, right? So you don't want to target you don't want to target a kind of far distance range for your take profit, right? And even your stop loss too, right? You don't want to target something very big so that you can be able to have some good risk reward ratio. I I for one, I trade minimum 1:3. Other times 1:5, 1:8, 1:10. But the least I want to go at any point in time is 1:3. So for that reason, I'm looking at aiming at least 1:3 when I trade the London session. So sometimes I can get more than that. I can be going for 1:4, but once I see 1:3, I am actually satisfied. Anything from 1:3 is welcome. So where are we targeting? We are always targeting the next liquidity point, right? Maybe the previous high, the previous day's high that was created by the New York session. So the previous day's low that was created by New York, maybe some other highs or lows that we see we know that price should actually approach. Those are our targets. We don't want to target things that are outside the day's range. So if you are targeting something, you'll be targeting for your TP or something that is still within the previous range, right? The previous structural range. So we are going to be diving into our charts now for good examples on how this could be traded. But before then, one last thing. So just as I mentioned to you initially, we have majorly 4 trading sessions for the day. You can see the Sydney session, the Tokyo session, the London session, and then the New York session being the last major session for the day. Now, we like to trade the London session because, number one, it begins our financial day here in this part of the world. That's in West Africa. I really like that because it starts my financial day for me. But even beyond that sentiment, we see that liquidity is usually tight during the Tokyo session, right? There's no much movement in the markets, right? There's no much players in the market because the economic activities around the Tokyo session is very, very, very slim. And for that reason, the Tokyo session can actually serve as some liquidity points that markets will like to grab, right, into the London session. Not to forget that the London session is one of the biggest trading sessions that forms up to about 43% of all trading activities for the day, right? It takes a whole big chunk of the trading activities that we have in the day, all financial transactions. So London session forms about 43% of it, followed by the New York session, then other sessions could form the rest. So you can see that into the London session, there's this other session here that follows immediately after. That's the New York session. One thing about the New York session is that it also have large, large, large liquidity coming into the market there. So you can see that after the London session, after the opening of the London session, some hours into it, you have some overlap there, which tells us that around this region, a whole lot is going to be happening in the market, which can create opportunities for us to actually counterlize on in our trading. So it's actually nice trading the London session. London session starts by 8 a.m. in the morning and runs down till 5 p.m. That's 17:00. And the New York session overlaps London by 12:30 or 1 o'clock. Sorry, by 1:30 or 2 o'clock, right? So this 1 o'clock here, New York session begins to open, and into 2 o'clock we have the peak of the New York down to around 4, right? By the West African time, right? So that's being settled. What are we going for? I want to see how to form a template for trading the London session. Like I said, when you trade the London session, you are most likely to be a scalper or a day trader. That is to say, you want to use your lower time frame, maximum time frame 15 minutes, right, as your higher time frame, and You can either use 5 minutes or 2 minutes or 1 minute as your lower time frame. I recommend 5 minutes for your lower time frame. You can scale down to 1 minute if you feel like, but for me as a trader, if I'm not using 4 hours and 15 minutes as my high and low time frame, then I'm going to be using 15 minutes and the 1 minute. But for this video, I'm going to be sticking to what's the 15 minutes and the 5 minutes. And if need be, I can scale down to 1 minute for higher precision marketing. So let's run down into this. Now, there are various ways you can counterlize on the London session. First thing we've talked about how that you will have a tight range. You must have to see a tight range that is formed up by the Asian session, right? So that's where your preparation starts. The Asian session starts with the Asian session, ASIA. So preparation for trading the London session mostly starts with the Asian session. So we want to see how the Asian session forms a tight range for us to trade, right? So we, in many cases, mark the Asian high and the Asian low, and we are waiting for some liquidity sweeps around that area. So if we already have the price to be in an uptrend, then it's most likely that when price starts moving again the next day, the uptrend is likely to continue, right? That's if we are not already in the retracement phase. So we already have an uptrend in the market, maybe on higher time frame, like on 4 hours, market is giving us a strong uptrend. So we expect that when this whole trend wants to continue in the London session, it's going to be an uptrend, right? So that's not always the case, but we can just have that at the back of our mind because that happens a lot. But on the contrary, when we see this kind of tight range, the next thing we are waiting for is a manipulation, right? We're waiting for a manipulation, and that manipulation can be mostly to the downside. So that happens, taking out all the liquidity that is here, all the liquidity that is here, all the liquidity that are formed during the Asian session. And this could tap into the previous day's low or another block that was formed during the previous session. That's maybe the New York session of the previous day. That could tap into that block there. And what's the next thing that we see? We can begin to see price move up. Now, there are two things we want to wait for here. It's either after this zone is taken out, we want to see a weak rejection, a strong rejection there. You want to see price form a weak, right? Indicating that market is likely to change direction. So we want to see price form a weak rejection there. And then if this is on a higher time frame, we can scale down to a lower time frame. I want to see structural shifts. Break of structure, market structure shifts. Anything you see, another weak rejection, whatever you see. So that creates a zone that we can actually counterlize on. Now, during the London session, markets moves very, very, very fast. So you may not have markets tapping into specific other blocks again, right? You may not have markets tapping into some extreme other blocks again. But whatever other block is valid and market taps into it, you can want to take advantage of it. So in many cases, this is what you see. You can see the sweep to the upside, the sweep to the downside, then price continues if this is going to be an upward move. And for the case of the downward move, you can have something like this. This is done on only a single time frame, just the higher time frame. This, remember, we had to scale down, but on this we can see this kind of a move ensuing on the higher time frame where you see price sweep out the Asian high, could still give some move to the upside. It gives us a nice break to the downside here. Remember, when price is coming from a POI, a point of interest, the first break of the downside is not an inducement, it's actually a change of character. The first move to the downside is actually a change of character. I'm using small letter because it's not a major change. Now, on this change of character, whatever time we see price comes back to a zone that we respect, be it an order block, be it a fair value gap, just any closest PD array to continue to the downside, then we can actually take our trade there. So is this going to work in real time? Let's check it out. Let's see some live examples. So I've done some chart marking, which I'm going to do again, but for today, I will start from what happened today during this session. So for today, I did not counterlize on this particular trade because the movement was a bit more tricky than it should be. We see that this is Tokyo session here, marked purple here, this purple range here happens to be our Tokyo session. But what are we seeing there? This Tokyo session already had all its liquidity to be swept, right? So liquidity did not actually build. Enough liquidity didn't build in this Tokyo session, and the little that built before Tokyo session had already been taken out, right? So we had some liquidity sweep to this upside. Price was in the downtrend here because structure has been broken to the downside from these long movements during the New York session yesterday. So we know liquidity, sorry, price movement is to the downside. So we expect to see London session continue down, right? Take out the share liquidity and continue to the downside. But what do we get here? We see that price already swept within, price already gave a sweep within the Asian session, that's Tokyo. Already swept to the downside within the Asian session, that's still Tokyo. And for that reason, it's either we are just going to come here and take our trade, but we don't want to take any trade during the Asian session, this purple zone here. So we most likely are not going to get any trade, of which we didn't, because price didn't come back to sweep any further liquidity. It had already taken the most of the liquidity it wanted to take. So this would have been the next point where we take our trade. Should it be the price, after sweeping this down at London session opening? I think this was where London session opened. Should it be that this Frankfurt, should it be that price came up here, they would have taken the turtle soup here, a sell down. But since price didn't do that, we couldn't take any entry today. And the same thing happened on euro. Like I told you initially, the two best pairs to trade during the London session is the GBP USD and the Euro USD. But we had something like this happen yesterday. Okay. So we had something like this happen yesterday during the London session. What did we see? We saw that this is the range of the London session, from this range high down here to this range low, right? And a whole lot of liquidity, were grabbed here. We had some liquidity grab here during the Asian session. We had some liquidity grab here during the Asian session. Now, for this reason, we couldn't have had anything to do with the Asian session, but into the Asian session, we still saw some other liquidity formation here again. Liquidity build up here again, and into the Frankfurt. At the London opening, what do we get? We see that price had to run down into this other block here. What's the first thing we see? Liquidity has been swept here. Price ran in the opposite direction into this other block here. Tapped from there. Some aggressive traders would actually take their trade from there, right? Not to worry. So liquidity sweep, break into this zone here. And what do we get? We could take a trade from here. Like I told us, there are a few things we want to look out for. Number one, the manipulations there, all the sweep of liquidity, our order block. Okay, so these were the liquidities that price actually targeted here during the the London session open. Reason being that every other liquidity here had already been grabbed, so price didn't have anything to come and take down here. So it had all this liquidity to grab. So this is our target for the London session liquidity grab. So what do we have there? So liquidity was grabbed. Before then, we had the break of structure to the upside here as a manipulation there. So structure broken to the upside, came, grabbed all the liquidity, and we could have fixed here at the middle of our fair value gap, putting our stop loss below the order block there, and I take profits usually around 1:3, right? This high here, or 1:4. If you want to go 1:4, if you want to go anything beyond, then you have to look out for the initial high that price has actually formed. Maybe if you use this particular high, then we'll be getting some 1 is to 4 there, 1 is to 4 on that particular high there. Or if you want to go somewhere higher, of which I don't really advise that we do that, meaning that we are mostly scalpers when we trade this session. You want to mostly scalp the market, get the little profit you can get and go out, right? So if you have to do that, this is a very nice example here. So it just follows this particular pattern that we have drawn here. Okay, on the single time frame, you see that liquidity sweep there, back into some zones there, and what do we see? Okay, in this place you should have a breaking structure to the upside and return, but they didn't have the luxury of that. When in this example we actually didn't have, in this first example we actually didn't have the luxury of that. So let's go back to a higher time frame here. So this is the place where we expect liquidity to take, right? And we scale down on a lower time frame, either 5 minutes or 1 minute. Scale down to your lower time frame with the 5 minutes, with 1 minute, you can actually see properly and see proper movements that price actually made. So should it be that, oh, you don't trust this particular order block or you didn't get the order block, not to worry. You could still see certain things as this. Uh, you could still call this point your break of structure, right? This is your break of structure to the upside, and using order flows or using breaker blocks, such models, you can actually still counterlize on this trade and still counterlize on this trade. So after the break of structure, price comes back to your breaker block there on this particular time frame, and you can have a good flip entry there, risking very little, stop loss below the breaker block, and take profit where at that key high there. So you can see have some 1 is to 6 there. This on GBP USD. So this is just one example. Let me show you another example before I go into some examples on Euro USD. So just other marked up examples we can have here. So looking out for this on a higher time frame, you can see this is the Asian high there. Remember, price structure looks to the downside. We had a break of structure in the previous day here. If you understand the way I trade, you know that this is a break of structure to the downside. Why on this time frame this happens to be our inducement here. Price traded and closed higher on this particular day. So this happens to be a change of character here, change of character to the downside. And what did we see? We're expecting price to do some manipulation and run down. Did it do it for us? Of course. Now this is the liquidity that we look at to see price grab while it is coming back down to continue downwards. And look at the Asian liquidity here, Asian high here. Now at the opening of New York session, what did we see? Now the main order block that is our extreme order block here had already been taken, so we don't expect price to really come this high again, right? Since our extreme order block has been taken and mitigated. So what we'll be looking out on our London open is just to see price do some stuffs around here, since the Asian high has already been manipulated. This is the highest point on the Asian session here. Has already been taken, right? It has been manipulated. This. So Asian high has been manipulated here. So we are not looking at sweeping it the second time. We may be looking at that. But if we don't get it, not to worry. What do we do? London session comes back into this zone. In that zone, you scale down to your lower time frame. In that zone, you could scale down to our lower time frame. It's 5 minutes. Sorry, it's 1 minute. What do we want to see? We want to see, we already have our sweep there. We want to see structure break, and we actually have plenty of it already. So we already have plenty structure breaks there, right? Remember, when price breaks the most recent low after tapping a POI, you can call it a change of character. So we already have a change of character here. Already have a change of character there. And in this case, where is the valid order block? It's certainly not any of these, not this. This one should have been the valid order block, but sorry, it is an inducement high. This should have been the valid order block. Sorry, it doesn't have a fair value gap. This should have been the valid order block. Sorry, it is not. It's already mitigated. So our valid order block happens to be this week rejection there. And what follows our valid order block? Why is it valid? It is the one that have it forms a prominent candle. It sweeps every other single candle that is there. It has a good fair value gap. It has high momentum. Move away from it. So that being a valid order block, we are waiting for price to come and mitigate it, or have the fair value gap that is after the other block there. So what do? We could have placed our entry, have the fair value gap, and while waiting for price to actually run back down, right? Back into that place, that zone there. So where's our target? Our target is either Asian low, and that will already be giving us a very good risk reward. This is how I trade. 1:6. Or we target the day's opening, right? So we could target that. If you want to still push further, then for a break of structure, this is where we are targeting, for price to break structure to the downside. It's already in a downtrend, so this is where we are actually going to be targeting on a higher time frame. And here on 1 minute, it looks very big, but if you are to scale back to your higher time frame, you're just going to see that, oh, this is just one normal kind of trade, right? So in this trade, how much are we risking and how much are we looking to gain? So we are risking just few pips here. Wow, 4.9 pips, and our reward, we're not looking at very much, maybe some 53 pips. So we have some 1:11 there. Oh, just you could do that. Some days gives you 1:3, some days gives you more. Mostly you can get more out of it when you actually scale down. So this is something better than the 1:3. It's around the 1:7.5. Let's see another example here. I think we have another classical example of this movement here. We have some other classical examples here. Okay, so this, I'm going to be showing you this example. I think these are third example. I'll just show you 5 examples, and we can call it a day for GBP USD. Maybe one example on Euro, and we're done with the class. So looking out for this, this is on our 15 minutes. Let's get everything off. Let's get everything off. Let's get all the markups. Oh, did I just move my indicator? Okay. Okay. Okay, so we have this as Asian session, right? Tokyo there. Okay. Now, looking out for this, this is the high of Tokyo session. I told us initially that we are looking out for liquidity sweeps, right? On that particular session. So, sorry, in the London session, we want to see the London session sweep out the Asian. Now, looking out for this, Frankfurt already gave a sweep here. Frankfurt already gave a sweep here, sweeping out the Asian session high. So that indicates that, oh, we are actually interested in the sell, right? And if you also look at this structure here, structure is very important. Now, this was inducement. This is a major low here. Get some highlighter. Yeah. So this actually happens to be a major low. This happens to be a major high. Trend, understanding your trend direction is very important. So you know this particular movement is intermediate. It's just between the major high and the major low. Now, in many cases, we want to see price run down, 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 down to the major low before we take any buys, right? Continue. We want to see price run down to the major low. That's the extreme order block here. We want to see price run down to the extreme order block, and we can continue our buys from there. But until then, we could sell into the other block, right? Using this as some liquidity here, we could sell into the other block. So let's see how we are going to do that on our lower time frame. Now the high, the Asian high has been swept, so we are happy about it. What do? We scale down. I will just go directly to the 1 minute so I can have a very good risk reward. Of this action investment. Okay, so we can have some good risk reward here. We are dealing on this example. So this is Asian high, swept on a higher time frame, and yeah, we're actually happy about it because our opportunity is beginning to, when we see things like this, we know that our opportunity is beginning to pan out. So what do? So the next thing we do is this: we look out for some structure break to the downside, right? So look out for some structure break to the downside so we could sell. Now, where do we see our structure break? This is our first structure break here. That happened on the pullback. No, there's no proper pullback here. This is where we get the proper pullback. Yeah. So we see our first structure break to the downside. Call that a change. Call that a change of character there. And upon that change of character, we come back to look for the next valid order block here. And this is where we get the next valid order block. And why is it a valid order block? First and foremost, it has a fair value gap. So from this order block, what do? We can expect market to run back in and give us a sell, put our stop loss above, and put our take profits where we are expecting market to get to, where we are expecting price to get to. Now, looking at this should have given us a nice 1:9, or 1:10, and so 1:10 there, targeting this low here. Okay, so using the other flows should have given us a nice 1:9 or 1:10. But we see something. While price moved, price came back and tapped us out, right? Tapped us out. I went to the upside. Now this is a confirmed break of structure to the upside if you check it on the higher time frame. So what do we do? We could go back to a higher time frame and confirm what price did there. this example I'm talking about. So price gave us another sweep, which indicates that it may likely still come down. So we'll scale down again. It's actually not difficult. It's just normal smart money concept. So looking at this, we have been taking out here. Okay, okay, okay. I've been taking out in the break of structure to the upside. So the next thing we are expecting is this, for price to come back to this other block, right? The other block that ensued, for price to come back to this other block and give us a continuation to the upside. Why? Because this is the other block that actually caused the break in structure. Pull back, down, break to the downside, give a pullback here, and broke to the upside. So what we're expecting on this higher time frame is that price comes back to this other block that's around this pullback and go up. But what did we see? We see that instead of price to continue going up, it still broke again to the downside. Wow. So this is more like a heavy London manipulation. So we want to be very careful here when price does this kind of a thing, broke to structure to the upside, broke structure to the downside to continue. Well, we want to be very careful, but we don't get confused anyway. No matter how the market tries to confuse us, we always have what to do about the market. The market can only do few things. It can't do any new thing at any point in time. It can only do few things. So looking at this is the particular order block that uh, broke structure to the upside. So that was the last demand. Now this demand has been actually compromised, right? This demand has been compromised, so we can use this as our breaker block. So when price comes back to it, we can actually take our sell there on the breaker block. Now, if you should go down to lower time frames, such as 1 minute, you could see it very much more clearly there. Mastering this session. So in some days it plays out very smooth and easy to catch, and some other days it's may be a bit tricky, right? But however tricky it plays out to be, however tricky it turns out to be, we know that the market doesn't do anything new. It only repeats just one single thing, right? Grabs liquidity, and that's everything it does. We do it in different ways, but you know, we are not bothered. So coming back to this zone here, what do we see? We see price gets here, began to slow down. At that point where it begins to slow down, here we could take some trades, put here as our stop loss and take profits. The same thing with our initial zone, but here the risk reward has actually reduced from 1:10 to 1:5. So from 1:9 to 1:5. And the same thing on our lower time frame, you see structure broken down here. Right, the structural low has been taken. And where do we expect price to come back to? Other block. Other block has a fair value gap here. The other block has a fair value gap, which is this on our lower time frame. What do? We could counterlize on that again, meet the fair value gap. We may not be able to enter into the second entry on this particular time frame here. Let's see. So that's just that on days like that, if we are not very smart, we become emotional on days like this. Because looking at it on lower time frame, you actually missed it. But looking at it on this particular time frame, look at the other block here and look at the fair value gap. Right? Just enough for the entry. Our entry halfway into our fair value gap and our price above our other block. 1:3.8. Only aggressive traders will do this. I actually won't take that. Because I don't like that risk reward, but anyway, it's not bad. Then, uh, finally here, this should be like number sixth example on how you could counterlize on this particular kind of trade. We could have session here. I actually picked this example, where price actually does not come back to totally mitigate the Asian session for some reasons. So in times like this, you may want to think that, oh, price is actually not going to come back and mitigate that session again. It's just blown all the way. But price does only one single thing. Like I tell you, it does just one thing, and it does it in different ways, right? So how do I counterlize on this? I may not get an early entry, I may not get an early trade entry, but I should at least get one entry. So what do we do? In this case, look out for this. This is our Asian range here. It's a very, very, very long range that happens to be trending. Maybe Japan had a whole lot of economic activities going on by that hours of the day or in their own economic calendar. So remember, we said we are looking out for number one, liquidity sweep, right? So we know this trend is to the upside already. And what do we get? We get price has done some good sweep here. Get price has done some good liquidity sweep there. Okay. So after liquidity sweep, what do we see? Break of structure. After the liquidity sweep, we see the break of structure. So after the break of structure, what are we looking for? We are looking for order blocks, right? So this is a valid order block after the break of structure. The price forms another order block here, went, give us this, and forms another one here. So we know that we can't trade our first pullback, right? And that's because it's actually an inducement zone there. That order block there is going to be induced. So we wait for price to actually induce it, tap into the next order block there, and we can actually get a nice trade entry here. So put it there at the fair value gap that follows the other block, because there's definitely one halfway the fair value gap, no matter how big or no matter how small. If it's too big, then you can actually neglect the trade. So halfway our fair value gap there, stop loss below our zone or below the other block, and take profits at the next high, right? So take profits at the next high. If you scale into your higher time frame, you're going to see where the next high is. So it's that you go take profits here at the next high, the price should come and evade. So if you do this on a day like this, when price seems to not be giving an opportunity, you're actually already getting a 1:5, there 1:4.84. That's approximately 1:5. Then looking out for this, okay, this is the trend continuation. Like I initially marked, we are in an uptrend. This is our highs here. We are expecting price to come and break these highs. They are not protected highs because this is an uptrend. They are major highs that are going to act as major liquidity for price to sweep. And these are strong low here. Strong lows after the inducement. So price came to our what? Our extreme POI here. Our extreme POI also have a fair value gap, well refined on the 5 minutes. So well refined and respecting other flow, so we are good with it. The price came there, and we could have a set and forget kind of buy here, right? Set and forget kind of buy here. Stop loss below the zone, take profits above the zone, and this is more like 1:7.2, and we are expecting price to actually take that out. Okay. Yeah. Okay, so that's there. If you didn't get this entry here, maybe you are the kind of person that likes to wait for confirmation. Good and fine. So you could call this, while waiting for your confirmation, you could call this, let's get this. So while waiting for your confirmation, you could want to call this a change of character. Why? Because price has tapped into a POI. After a change of character, what did we get? Another swing. This will be your inducement swing, right? Okay. So on this time frame, what happened? That's an inducement swing because let me show you concerning matters or matters that concern swing. This swing high, sweep liquidity there, broke structure there, went for that high, gave a pullback. This is our most recent pullback, traded above and swept our pullback. So inducement was completed here. So you could buy from here at this liquidity sweep. If you are still the kind of person that doesn't want to buy there, no problem. You still look out for this. And this becomes your other block here. Why? Because structure has still been broken to the upside. Market has traded above. So looking at this, at the point where price returns down here. Now this is not London session trading. This is just normal price action, SMC. So at the time price returns back to this other block, having this big fair value gap, what do? You can counterlize on the buy, and that's going to give you a whole lot of big opportunity to actually scale in. The problem is, are you going to recognize the opportunity when your opportunity begins to play out? Because most people have that problem. So this 1 ratio 6, 6.6, and this 1 ratio 7.2. So if you are risking a tiny percent of your account, you can actually have 6% of your account here. If you are risking 1%, you can get 6%. If you are risking, like me, I risk 0.3 to 0.5. So on this trade, you can get 3% of your account. That's easy and go in there. So that's for that. For a brief recap, I did some stuffs on, I did a lecture on gold last week, predicting how the movement of gold should be last week, Wednesday, and I showed some of my anticipation on gold, what I'm actually anticipating. So I think for gold, let me go back to the 4 hours. I usually want to trade high time frame. So gold last week, Wednesday. Yeah. So gold was around in and around this zone last week, Wednesday, when I made this video. Yes, it's Tuesday, Wednesday. Yeah. So gold was here last week. So my prediction was that gold was going to come right down, down, down here into this other block and give us a move to the upside. But gold actually didn't do that. It just came to give an inducement here, which tells us that this particular circle has ended here, and I'm still anticipating one last push into this zone here. And on 4 hours, this becomes a strong high after this low is actually induced, right? Or inducement is here. So this movement that is coming here, the least we are expecting to see is here. This particular movement that is starting now. Let's go down 15 minutes and let's see. Okay, so liquidity that I was expecting to sweep has actually been swept. I could jump into this gold trade now. Otherwise, I go and look for some structure. Just mark up some structure for proper confirmation. So I've been anticipating this sell here. So I'll be having some gold sell here. I think, yes, this was exactly my gold entry there. I have that on my phone. I will be showing us later after the video. Will show us next week. So expecting price to slam into this zone here, take out all this as liquidity, slam into that zone and start selling from there. So that's what we actually have. So this particular sell, well, for a small time frame trader, you may want to exit around here. But for me, this is inducement, so I want to stay till this place. I'm more of a swing trader than a low time frame trader. But be sure to take out some of your profits here and just allow the rest to run. Okay, so that's for that. I'm still looking at gold trading from this particular high, trading into this zone here. So that will be everything that I have for today. And for GBP USD, I'm looking to see a buy from some zones down here, right? I have some of my zones down here marked up in some other charts here. So I have some zones down here to see a continuation to the upside because we had a proper break of structure here. And, so this is a breaking close, and we've had some inducements here, so we can see price run down here and go back up. Otherwise, gives us a 4 hours inducement, taps into this zone, which I was expecting it to do that while I was trading all the way down here. It went up. So we could see all those stuffs actually play out. Just remember the pattern the pattern is actually the same. Nothing changes. Smart money are just one group of people, and they cannot fabricate new things every day, right? They can only fabricate new prices every day. But you see, they also have their strategy of doing things, and they are also so very disciplined that they stick to their strategy. All you need to do is to find out what they are doing and follow them, right? So thanks for watching today's video. We are pitch trading floor. We always find the liquidity because we cannot read the liquidity. So the best you can do for us, or the least you can do for us, is to help us like this video, subscribe to our channel, follow our live videos, and so we are hoping to see you again next week Wednesday. Thank you.